Let's check the markets. Let's check the weekly developments in order to understand what are the interesting levels for entering the market these days. And here on the euro-dollar weekly chart, we can see that there was a reversal from 106 area, and then the single currency opened in the area of 109.20 today. Weekly indicators are quite positive. Although we can see that some moving averages are acting as resistance marks. These are 50-week moving average at 108.95, and higher we have 100-week moving average at 109.94, close to the psychologically important level of 1.10. So we are also approaching resistance levels which connect the highs of 2017, and although the euro is in the positive territory, some potential for closing this gap surely exists. Support is located at 108.37. This is 200-week moving average on the daily chart. And well, we can expect that the market players will try to buy the single currency on its pullbacks to the downside. Here I have the weekly pivot indicator, and you can see that its jump on the opening of today's trade has made the single currency open above the second weekly resistance. So now these resistance levels act as support actually, but although we are in favorable territory, probably I wouldn't risk buying the euro at the current levels. Probably I would wait for some pullback to the downside for more attempts to close the gap. For the return to levels around 108, but at this point around 108, I would consider some long positions in euro-dollar, or if we are trading on the intraday basis, then levels at 108.77 will surely be attractive with targets around 109.20. The environment generally seems to be favorable for the single currency. We had the favorable results of the French elections first tour. Also, last week the euro area released good and strong flash manufacturing PMIs, and so the fundamental picture has surely improved. Another important event on which traders will focus and which will likely provoke a great deal of volatility is the meeting of the European Central Bank on Thursday. We should remember that after the previous meeting of the European Central Bank, which took place on March 9th, here is this area. Investors increased expectations for the central bank's policy tightening in the foreseeable future, and we saw euro-dollar rise from levels around 105 to levels near 109 mark. However, at the end of March, the expectations of the ECB's monetary tightening have evaporated, and traders will likely be very interested to know how Mario Draghi now views the picture for the euro area. If he somehow decides that it is time to send a more hawkish signal, and he may do that because the political risks have significantly diminished, then the odds are that the euro will be able to overcome resistance around 109.20 and get to 110, 11 area, targeting at this point, and probably higher as the euro will leave this consolidation range. If Mario Draghi still doesn't hint at further monetary policy tightening by the European Central Bank, if he decides to wait until the second round of French presidential election is over, then the euro will be able to, the euro in this case will correct to lower levels, and in this case will target levels around 107. Looking at this support, looking at this range of the euro dollar, it is not likely that the pair will get significantly lower than 107 mark. So the main outtake for the euro is that fundamentals have become better, but we will wait until Thursday to see whether the European Central Bank agrees with the view that the Eurozone's economy is now fine to taper monetary stimulus.